Now here's a list of the different types of mutual funds, ranging from lower to higher risk, that cater to different groups of investors and their common goal. Money market funds. They invest in short-term debt investments such as commercial paper, CDs, treasury bills, money market funds. They're neither insured or guaranteed by the FDIC or any other government agency. Although money market funds attempt to maintain a stable $1 share price, you still can lose money investing in such a fund. Now let's talk about municipal bond funds. Generally offer income that is free of federal income tax, and income may be free of state income tax if the bonds in the fund were issued from your state. Remember, although interest income from municipal bond funds and some money market funds may be tax exempt, any capital gains are subject to tax. Also, income for the same investors may be subject to state and local taxes and federal alternative minimum tax. Now let's talk about income funds. They concentrate their portfolios on bonds, treasury securities, and other income-oriented securities. And they may also include stocks that have history of paying high dividend. Bond funds are usually subject to the interest rate, inflation, and credit risk associated with the underlying bonds in the fund. As interest rates rise, bond prices typically fall, which can adversely affect a bond fund performance. Predictably, balanced funds and growth and income funds seek the middle ground between growth fund and income fund. They include a mix of stocks and bonds and seek to combine moderate growth potential with modest income. Now let's talk about growth funds. They invest in stocks of companies with high potential for appreciation, but very low income. They're more volatile than many types of funds out there. Let's talk about international funds. They invest in foreign stocks and bond markets, sometimes in specific countries. Global funds invest in combination of domestic and foreign securities. There are increased risk associated with international investing, as you know, including differences in financial reporting, currency exchanges risk, economic and political risk, which are unique to specific country that you're investing in, and also have a greater share of price volatility. Now let's talk about sector funds. Sector funds invest almost exclusively in a particular industry or sector of the economy. Although they offer greater appreciation potential, their risk level is also higher. So investments seeking to achieve higher rate of return also carry an increased level of risk.